Hey everyone, welcome back to this trading course, and this is the trading series in which I'm going to teach you everything from entire scratch. You don't have to pay for anything. There's nothing hidden behind a paywall, and thank you so much to FT UK for sponsoring this. They're one of the best firm in the industry who are consistently paying out to traders from 4 years. So do check them out. Now let's begin. But before moving into this lesson, I want to talk about the course outline. I should have shared this in the first lesson, but I completely forgot about it. So here's the course outline. We are currently in the beginners module, and this is the lesson we are in. It's getting started with trading. Then after this, I'm going to have 3 comprehensive lessons on ICT. They're going to be around 20 minutes or longer, all of these. Individually, they're going to be 20 minutes longer. And then I'll move on to trading models. And in this, you will get like a complete set of rules for a model a model or a strategy, whatever you want to call it, that you can trade in the markets. So yeah, this is what I wanted to share. And have covered the beginners module. We are getting into the advanced and the intermediate level stuff in the next video. Stay tuned for that. It's going to be released on Thursday. So we have like pretty much all the basics, although it's not enough for you to jump into the live markets, but you got the idea of what trading actually looks like, what you have to expect and what to do and what not. So now I'm going to go into a little bit more practical side of trading. And now this is where things get started. This is where we are going to talk about brokers. So broker is basically a company or an application or a platform which helps you buy and sell stocks, currencies, cryptos, and whatever assets are there. They act as a middleman for you and put your trades in the market. They connect you with the market. And an example of a exchange is and broker is Bybit. Bybit has forex as well. Bybit has commodities. You can trade stocks on Bybit's indices and it is specialized more for crypto, but you can trade literally any asset on Bybit. And you can see its interface. This is how all the crypto exchanges and brokers looks like. They have a buy sell buttons and all these different features which you will get used to with time. And then we have another platform where actually you connect to a broker and trade. It's MetaTrader 5 or MT5. This is also used to trade, and you can see the positions here. You can just buy and sell things here. Remember, MT5 is just a platform that connects you with your broker. So a broker connects you with the market. MT5 connects you with the broker. So it's not a broker actually. It's a connection between your broker. But I had to mention this because you need to have this. Without this, you can't really do anything on mostly forex brokers. Now with Bybit, things are a bit different because they have their own platform, so you don't have to download MT5. Also, if you want to join and trade with Bybit, you can check the link in description. You're always going to get bonuses, etc. with it. Now, this is how a broker works. You deposit money into the broker, you place trades, which results in either a loss or a win. The broker takes a certain percentage of fee from your trade. So that's how basically it all works. You just deposit money, you either win or lose, and the broker keeps the commission of it. That's the entire model. Then we have prop firms. So prop firms is actually a company that funds traders with capital when they pass their evaluation. So they have different kind of evaluations that you have to pass, and they will get you with capital. For example, you can see FT UK's website here, and here there are 3 kinds of evaluations: an instant funding, a 1-step, and a 2-step account. Now with instant funding, what you do is that assume you want to buy a $100,000 account. You'll get $100,000 in capital, and you have to pay a $1,500 fee for it, or $1,499 actually. And then you have to follow these rules here. You can see a drawdown. You will be given a drawdown percentage, a daily drawdown percentage, and there are other rules as well which you can check. And whatever profits that you make on it while following the rules, you are going to keep it. So assume if you trade on a $100,000 account and you make 2% on it, you will get $2,000, and it will already make up for the fee that you have paid. And if you lose money, you won't lose anything more than this $1,500 that you have put on the account. Then they have a 1-step and a 2-step account as well. A 2-step account is where you are given a demo account once, and they ask you to do a certain percentage on that. Then you are given another demo account, and then there is a bit reduced target for you there. And once you do that, you'll get your capital. But they are way more cheaper than instant funding account. For example, for 2-step account, it's going to be costing around $400 or something like that. So you can check that out. If you think you don't have enough capital, then this is something that you definitely want to check out. Now you might wonder, how does this work? Because they are paying you this much money, and this is like basically a lot of risk, right? Because a lot of traders lose, and if they hand over capital to everyone, then that means that they're going to be in net loss. But that's not how this works. So what happens is that you buy their evaluation, right? If you pass their evaluation, they fund you with capital, and that capital is also demo capital. Else they keep the evaluation account fee. So just like in the upper pay their instant funded account, they gave you $100,000 in demo account, but the profits that you make on it, they're going to pay it from their own pocket, right? But if you lose this, since 90% of traders are losers, if you lose this, they keep this $1,500. So I hope you get what I mean from, and I hope this made it clear for you on how their business model works. So if you make money on their capital, they pay that to you, but it's really demo capital, and they just pay it to you from their pocket. And prop firms are there from like a decade now. FTMO is the very first forex prop firm. They started in 2014. They are madly expensive, and then we have a lot of other prop firms as well, such as FT UK, which is relatively cheaper, and they pay you as well. Now this was about brokers and prop firms. systems. Now, what I'm going to suggest you here is to not really like rush into real trading right now. You can always just start with very small for your practice. Just for your practice, actually, you can start really small with a broker. For example, you can just deposit like $100 on your broker and practice with like a $1, $2 trades until you master your emotions and all that stuff. Or you can just decide to get a prop firm account for a small prop firm account, such as a 5K account or a 10K account. That doesn't cost that much. It will cost you around $30-$40. That's pretty much it, and it's good for like practicing. And if you ever want to decide to get on any of these, remember to start small. Don't put so much money in it. And I can just give you a bad advice here by telling you to join with my link and get a bigger account, but I don't want to do that. It's just foul play, and I want you to take it step by step and advise you on what's best for you. So yeah, again, this is it for this lesson. If you have any questions, you can drop it in the Telegram or ask me on X. Both will be linked below. And like this video and subscribe if you find it helpful. Goodbye.